what I wanted to do is just take a minute that we didn't get a chance to present. This is a report from the ACFE. I'm a certified fraud examiner, and the ACFE is the Association of Certified Fraud Examiners. And this is some of the only empirical data out there about frauds, that's scientifically based. And it clearly shows that fraud is evasive, that fraud is, in their estimate, based on some 2,000 actual cases, is 5% of revenue in the average company. So do the math. In my company, that's $5 billion, okay? In Rutgers' budget, it's millions and millions of dollars. In a small business in Joe's Pizza, it's hundreds of thousands of dollars. Okay, so it's happening everywhere, and it's something that we're not finding. And this report is really interesting because it gives you a real clear idea of who's doing it and where it's happening of the ones we find. But remember I shared earlier, we're not finding most of it. So this is just a small sample. And if you remember from the presentations that we had, and you've seen this before, we've got reasons for fraud, we've got pressure, opportunity, rationalization. Pressure is I have some motive, okay? My grandmother is sick and she needs chemotherapy and I don't have health insurance and I got to do this. I'm helping my grandmother. I've got to help. Rationalization, Chi's making $100,000 more than me, and we do the same freaking job, and I'm working 12 hours a day. She only works 7, and I'm getting ripped off. They owe me this money. It's not. I'm not stealing anything. I'm just getting what I deserve because Chi gets paid more than me, and she doesn't do as much as I do. And then there's opportunity. I have some way of doing this that I believe I'm not going to get caught. Okay. Now, when we talk about automation, analytics, the stuff we talked about in this class, which one of these three is the one that gets that you're addressing with automation primarily? Yes. Opportunity. Yep. Right. Opportunity. Because if you put no one in a position where they can perpetrate or conceal a fraud and take away opportunity, you will stop fraud. And the point we've made many times in this class is that 42% of all fraud is collusive, and most financial fraud is collusive, and the only way to stop collusive fraud, your control system won't do it because it's all based on 4 eyes principle. And certainly your non-statistical sampling methods that you're all going to be using are not going to do it either because, because it's collusive. And because you're taking a sample of 30 in a population of 25,000 and you think you're going to find something. If we really did true statistical sampling, we would double, triple, quadruple the size of every audit firm in the country in order to do it the way we currently do it, and that's not going to happen. So the only way to stop it is to create a perception of monitoring. Create the idea that when I run a red light in Newark, there's a camera there, and it's going to record everything, pictures of me, and an 18-second video of me running the red light, and it's going to change my behavior. And that's the only way you're going to address it. And I was just talking with Ann, the professor here, about we're doing some work with the Pink Book with the ACPA with some our chapters about this monitoring. We're going to be authoring a chapter in there, which I think is kind of interesting because the AICPA has been a lagger in promoting innovation in audit and accounting. And now they're saying we're going to take a leadership role in that. So they're helping to try and develop this, which means you may see on the CPA exam questions about some of this stuff because they're starting to take a leadership role very purposefully and very intentionally. But she used the example of in an automobile when you're driving down the road, right? The speed limit's 55. And what's happening? You and everyone else are going 65, or what do they say? Under 9 is fine. So if you're going 64, you're okay, right? And then they see a cop on the side of the road, and what do? We all slow down, and then we get by the cop, and we all speed up again, right? And that same thing is happening in business. We have a bunch of guidelines and rules and FASBs and all this other crap, but we don't really follow that. We go along and with everyone else, and if we see a cop, an auditor, we slow down a little bit, and then when the auditor leaves, we speed up again. And that's really the way things go on. And I'll tell you, because I live in that world. I live in the business world. And that's what happens. So the informal system leads men and rivers crooked. That's what happens. And it becomes a relative thing. I'm not I'm better than most people are. I only cheat part. I only drive 9 miles over the speed limit. You drive 25 miles over the speed limit, so I'm better than you. I'm okay. So that's the kind of thinking that we got to change because it's very costly in business. Okay, so let me just take you through a few of these. We have financial pressures, vices, work-related pressures. 6 factors that increase opportunity: lack of controls, inability to judge performance, failure to discipline. And that's an interesting one because, most people that get caught in fraud they may lose their jobs, but they're never prosecuted because we don't want to be in the press when we, sell securities and find out that this company has had fraud going on, because if you have securities invested in that company, you don't want to have your securities in there because you think there's something wrong. Most whistleblowers, the people that call people on fraud, they get fired. They lose their jobs. So it's not a real safe career to be a whistleblower. Even now under Dodd-Frank, they have this new thing where you can get paid for turning in people to the SEC, but not much of it's happened because people, the consequences, even though you make some money, are worse. Lack of access, ignorance and apathy, incapacity, lack of an audit trail. Again, I talked about collusion. 42% of all fraud based on this report, and most financial fraud is collusive. So your whole control environment isn't going to find these things. So let me take you through. Unfortunately, my slides, I just made these up last week. I redid them from the report from 2012, and for some reason my snap it was kind of blurry. But this 5% of revenue is the cost of fraud in the average company. So everywhere you go, when you go in a company, you say, what is your revenue? Or if it's a public organization, what's your budget? And take 5% of that. That's what you're losing in fraud. Okay. And so let me just walk you through these. There's 3 basic types of fraud we covered. Asset misappropriation is the most frequent one. That's everything from stealing copper out of the plant to forging checks to ghost employees to T&E fraud that you guys found. Remember the T&E stuff we did with oversight? That's that kind of stuff. Then there's corruption. That's primarily bribery, conflicts of interest, okay? And then there's financial statement fraud. And look at, in terms of frequency, the least is the financial statement fraud. But in terms of the dollar impact, the greatest is, of course, the financial statement fraud. And again, the biggest problem there is revenue type things, revenue recognition, earnings management things, and that's the rationale. I'm helping my buddies here. I live with these people. I don't want my friends and family at work to lose their job, so I'm going to mess around with this provision just until next quarter when things are going to get better, and then it's going to be okay. But, it happens all the time. Some of the biggest problems, the most incidents from these, now this is actual data now, 3,000, well, it's actually over 4 years, it's about 6,000 cases. The biggest problems, Middle East and North Africa. That might not surprise you, but that's where we see the biggest problems. The duration, how long do these things go on? Check tampering, payroll, ghost employees, those kind of things. You're talking 2 years, average of 24 months of 2 years. So these frauds, even the non-cash ones, go on for at least a year. So frauds are not caught right away. They go on for a long time because people don't go and do fraud unless they really don't think they're going to get caught and they have a plan. Then they get sloppy, they get lazy, they go on vacation and someone finds out. Okay. And again, we talked about who finds these things. External auditors, 3%. We don't find fraud in external auditors. I don't know what we're finding if we're not finding fraud, but we don't find fraud. Internal auditors, 14%. And the biggest one is tips. So under Sarbanes-Oxley, you have to have these hotlines. So you can call the anonymous hotline. You always wonder if it's anonymous. And then, that's how we get reported. But I want to make the point again, we're not finding most of it. Type of organizations. Private companies versus public companies versus government versus nonprofit. Why do you think private companies are higher than public companies in terms of incidence or frequency of fraud? Anybody? Why would private companies have a bigger incidence of fraud? Maybe. Just speculating. Yeah, less regulation. Yeah, they wouldn't be under Sarbanes-Oxley, SEC. So, But look, it doesn't help that much. You know, it makes a little bit of difference, but it doesn't help that much. Small businesses, the percentage impact of small businesses frauds, less than 100 employees, is huge. And there again, why would that be? Small companies, what?
They don't have an internal audit.
Yeah, internal audit or internal controls, right? They're smaller. They're what? Right. Why? Because the accounts payable person is also the CFO and and 4 other roles. So sure. But again, it's so no one's immune to this. That's the point. And one thing I want you to take away from this class is what we're teaching here, just because I come from Siemens and some of the people come from Lockheed Martin and IBM, but you can apply the same stuff to small companies. You can buy one license of ACL for $250 or use Excel and run it in your small company and use these same concepts that no one in this company can perpetrate or conceal a fraud. And what that might mean is that you just, monitor that accounts payable person, some of what they do on a statistical basis, a true statistical basis. So there's all kinds of ways to apply this stuff to small companies without spending, hundreds of thousands of dollars. Okay. All right. The industries that are impacted. So financial services, you'd expect that's going to be a big one, but there's all kinds of industries that are impacted. But financial services is a big one because we've got, all kinds of credit swaps and all kinds of creative instruments going on and that kind of thing. Who does this stuff? Owners and executives, primarily accounting executives and salespeople. These are the people. It's not Joe out in the line that punches a card in and out every day. Joe doesn't have any opportunity to commit fraud because we got him locked down. But it's you guys, it's the C-level executives. We know when the auditors are coming, we know what they're looking at, we know how long they're going to be there, and we know when they're leaving. So we those are the people that are perpetrating fraud because they have what? What do they have? Motivation, rationale, opportunity. Which one do they have? Opportunity, right? Okay. Yeah. Okay. All right. So what type of schemas are going on? And it varies by year. This is, this is the one, corruption, okay? This is where we got the collusion going on. We got 2 people or 1 person, and in most of the cases, especially with corruption, it's multiple people involved, okay? What age groups are doing this stuff? Is it the, your age group here, or is it these 31 through 48-year-olds? Why do you think that is? Why is that age group doing more fraud than other people? Yeah.
Realization of failed potential.
Realization of what? Failed potential. That's a good one. Yeah. Yeah, you're right. Yeah. Or maybe they're more comfortable in the organization and they know where the problem, where they can do things, Yeah. Yeah, sure. Yeah, I've been in this job and she's making more money than me over at that other company and I deserve to get a little more out of the piece of flesh out of this. So, the tenure, okay, it's not the MBAs coming out of Rutgers that just started that are committing fraud. It's the people who figured things out a little bit. And maybe it's not the people that have been there for 10 years that like their job and they're hanging out. It's the people that maybe thought they had expectation management and thought they had a better deal than they did. And, okay. Education level. Well, you get an undergraduate degree. If you have a high school degree, you're not doing much fraud. You get an undergraduate degree, and you're doing some. But go get your MBA at Rutgers, and you're a prime candidate for doing fraud. I hope we've taught you guys effectively how to perpetrate fraud in this class. Do you guys understand now how to do fraud? Okay. I hope not. God forbid. And the gender. Now, tell me about this. Usually these women are much more honest than us guys. But in Asia, Middle East, Eastern Europe, these places, women do very little of the fraud percentage-wise. Canada and the United States, it's about even, a little higher on the guy's side. But interestingly, in the report from 2012, the women in Canada did more fraud than the men in Canada. Now, why is that? Give me some ideas. Why do you think that chart looks like that? This is empirical data. Yeah.
Well, probably correlates with the level of
Yeah, yeah, yeah. That's a good point. Yeah, yeah. And some of these are sort of male-dominant cultures too much, and they probably have more opportunity. So, is that it, or are you women more honest? Tell me. More honest? Yeah. Yeah. And it's interesting. A lot of the frauds that I've been involved in, it's more often females. For just the ones that I've been following up, and I'm not sure why that is, but. Okay, but anyway, obviously we all have got a problem here. Okay, it's not limited to one company, one age group, one gender. It's we all got problems. Okay, and then this idea of let's run criminal background checks on anybody we're hiring, any C-level executives. That's great, but 87% or so of people that commit frauds, it's their first time doing it. They have no background. So, you might catch someone who is jumping from company to company. But it is a good idea to do a background check because most people that, as I said, that perpetrate fraud, they're never prosecuted. So you might still find something out about them. All right, and then behavioral things. If Evelyn comes into her parking spot here at Rutgers and she's driving a Lamborghini, one day, we might want to wonder what's going on with Evelyn, okay? Financial difficulties, divorce, wheeler dealer attitudes. The person who says, "Oh man, I'm God's gift to your business here. I can do anything. Watch out." Unusually close association with vendors, conflicts of interest. A lot of that going on. My Uncle Charlie is a vendor and he sells these widgets, and we're not going to do competitive bidding because Uncle Charlie's a nice guy and he's going to give us a great deal, so we're just going to do business with him. Addiction problems, big issue. I'm a gambler. Excessive family pressure, past legal problems. Okay, and then why don't things get reported to law enforcement? Fear of bad publicity. That's the big one. Again, no one wants to admit that they have any problem in their company. Just like, you get your data stolen in a company, and that's bad for your reputation. Internal discipline, private settlements, too costly, no recovery. Yeah, most, 58% of victimized companies never get anything back. Okay, because again, if you're living an extravagant lifestyle, you might buy some assets, but usually you paid too much for them and they're gone. So very little recovery. Okay, so just want you to understand that this is why we need to use technology, because fraud is pervasive. We're finding very little of it. There's empirical data, and I'm going to put this report up here. There's a lot more in this report that I didn't show up here. But I encourage you to look at this report because it's really revealing of what's going on with fraud.
Let's continue our idea tutorial from last week. So after I talked to computing service, they have installed idea in all the computers in this room. But we still need to download the data for the project to do the analysis. So in order to download idea data, you can still go to Blackboard. And in the course document, there is a folder named idea. If you click into it, the first item is idea data. And then when you click this item, it will bring you to a Dropbox link. Then you can download it on the right-hand side, upper right-hand side. There is a download link. You can click download as .zip. So it will be, this whole folder will be downloaded. Okay. And you can just choose Save File. So then you can go to the computer, go to the download folder, and you will see this. There is a zipped folder named idea, and you could just right-click it and extract all. Then it will ask you to select a destination for the extracted file. You can just select it to be the desktop. Just choose desktop, so that it will be easier for you to find the folder. So after you extract the folder, you will find two folders on your desktop. One is accounts payable and one is named accounts receivable. So after you have these two folders, you can click the Start button. Click the Start menu and go to All Programs. Then you will find a folder named Idea. Okay, click this folder, then click the third icon, Idea. Okay. And then now, after you open the Idea software, it may ask you to whether to search for the update or whether you want to view the instructions. You can just choose No, do not to update the program now and view the instructions later. And then so everyone logged into the join.me, so you can see my screen now. Okay. Okay, and then as you may remember, in the last week I have teach you how to import different source file into Idea, and we imported both the accounts payable files and the accounts receivable files. Okay, so in this week, let's first let's focus on the analysis of these files. So first, let's go to the accounts payable data. You can do this by choose the file, set working folder, just we did last week, to choose the project. Okay, set working folder, and then you can just click desktop and locate the folder where we want to work on. And for the first analysis, we want to work on the accounts payable, so you just double-click the accounts payable folder. So even though it shows that no items match your search, you can still go ahead and choose Open, and then you will see this project properties. Okay, and you can choose OK. Now you can see that there are two tables in this project, accounts payable and authorized supplier. So before we start to do the analysis, I would like to ask you, like, what kind of risks and what kind of tests we can usually perform to the accounts payable data, or what kind of risks may exist, may relate to the accounts payable information. Any thoughts on that? Understatement of the payment. Yeah, that's one risk, but for this project, we don't have enough data to check that. In order to do that, we need to compare it to the original, like evidence or original source. So can you think about fictitious vendor? Like, yeah, that's a real company, yes. That's another thing we can check. Also, in order to do that, we need to refer to some external information to check whether the vendors exist. Actually, we can do a similar test using this two table, is that because we have another table include the authorized supplier. So we can check whether there are any supplier are not authorized, right? So that one test we can do with this data set. What others we may also want to do with the payable data? Check the amount to analyze whether there are any like abnormal amounts, right? Yeah, that's absolutely one thing we can do. And any other? Okay, another thing we may want to do is also a big concern of the auditors is that there may be some duplicate payment issue, right? So we can also check whether there are any duplicate payment in this data set. Okay, and actually a more comprehensive list of the tests we can do for this payable data is that we can also, besides the abnormal payment amounts, we can also check whether there are any abnormal payment date. Like for example, usually we are not expect the payment date to be the holidays or the weekends, right? So if the payment are paid in weekend, there may be something wrong, or there may be this is an indicator for us to do further analysis. Also, usually in the business, the rule of what we do business is that we first issue an invoice, and then we ask the suppliers pay. So usually the invoice date is before the payment date, right? So that's the common sense actually for business. But if we find any payments that have payment date before invoice date, there may be another indicator indicate that this is an abnormal transaction. Okay. Also, there are another audit assertion that we usually want to test is the completeness. So specifically for this data, we know that usually when we issue the check to pay, usually the check number should be sequential, right? So we issue one after another. Then we may want to make sure that all the checks are included in the data set. So in order to do this, we can check the check number to see whether there are any gap between those check number, which should be sequential, right? If we are missing some check number, it just shows that this check is not included in the data set. And we want to investigate why with these check numbers are missing. Okay. So basically, these are the tests that we can do using IDEA. And today I'm going to use IDEA to show you how to do some of these tests, because there are some functions in IDEA has already is very similar to the functions in ACL and that we have covered. So I just try to show you how to use the functions that's not been covered in ACL tutorial to show you the power of this tool. Okay, so let's go back to IDEA. So similar to ACL, after we import data into IDEA, we have those tables in IDEA. We may first want to consolidate the number. So as we discussed last week, the first analysis we can do for the business data is that we can do some general statistics to see the distribution of the data and to just get an understanding of what the data is presented and what the data is distributed. Okay, so in order to do this, there's one function in IDEA can serve for this purpose, which is, let me quickly, okay, so this is the original data, and which it shows on the right-hand side. You can see that there are several shortcuts of the functions. So the third function here under the database tab is called field statistics. So if you click this, it will show the statistics of some fields that in the table. For example, it can show the statistics of the numeric fields, which is shows here. Actually, in this table, there are two numeric fields, the payment amount and the check number. So we can see the basic distribution of this of the payment amount as well as the check number. For example, we can see there are 20 payment amount, and most of the 997 positive record, there's no negative payment amount. And then it shows what are the average payment amount and the minimum value and the maximum value. You can see that the maximum payment amount is around 200,000. Okay, so these are some basic statistics. So if we click the date field, you can see that there are 2 date fields in this data set, the invoice date and the payment date. So it also provides some general statistics or general information on the distribution of these dates. For example, you can see that the earliest date is 2008. The earliest invoice date is 2008, January 2nd, and the earliest payment date is 2008, January 10th. And the latest date, the most common day, and the most common month, etc., etc. And how many payments are allocated in different months. Okay. And if we have some field that's related to that representing the time, it will show here. But in this data set, we don't have any field to represent the time of the day. Okay. So this just shows the basic statistics of the numeric and dates field. So you can compare this with one function in ACL, which is called the statistics. So it also can show the statistics of numeric and dates field. But in IDEA, it shows more comprehensive. It draws more comprehensive statistic pictures. For example, in ACL, you can only see like the absolute value or the first 5 minimum value and the first 5 maximum value. But in IDEA, it also shows like the variance, standard deviation. Those are the basic statistics that ACL doesn't show. Okay, so that is for the distribution of the fields. And then let's go back to data. You can do this by click this data tab on the right-hand side. So just click it. So it will bring you back to the data. Okay, so one task we have discussed before is to analyze the payment amount to see whether there are any abnormal payment or strange payment amount. And we can do this by using one function that exists both in ACL and IDEA, but we didn't cover that in ACL. So I'm going to show you here is named the stratification. So in IDEA, just click Analysis, and then the stratification, the third function. So here, this function allows you to separate the value of a field into several categories. And then you can check how many records that locate in each category. So it's just like the frequency distribution we have discussed in last week in the data analysis lecture. So here, our emphasis is the amount of the payment. So here in the first option, it will ask you to choose the field to stratify. Here we just choose amount because we are more concerned about the unusual payment amount than the other fields. Okay. So because the payment amount is a numeric field, as we discussed in the data analysis lecture, to show the frequency distribution of a numeric field, we need to first separate the values of the numeric field into several intervals, right? And then we calculate how many records that are allocated in each interval. So here, IDEA allows you to start from the minimum value. So here it's so it first lists the minimum value of the payment amount, which is 0. And then here it's defaultly set an increment, which is 10,000. So if you click on the first row, the upper limit of the first row, it will automatically set the upper limit of the first interval is 10,000 because you set the incremental as 10,000. So if we decide to use the same incremental to set the intervals, we just click the different cells. For example, the cells in the second row, so it will automatically add a second interval. And then we just click the cells in the third row, fourth row, fifth rows. And in this case, you may remember that when we do the field statistics, the maximum value of payment amount is around 200,000. And if we can, let me see whether we can go back. No, actually no. But if we look into the general distribution of payment amount, we will see that most of the payment amounts are allocated besides 100,000. So here we will set the increment as 10,000 for from $0 to the $100,000. While then the payment amount above $100,000 will be considered as large payment. So in this case, we will increase the incremental. Like here, we just increase it from 10,000, for example, to 50,000. 50,000. So after we change the incremental, and then we just click the next line, it will show that the interval will automatically change from 10,000 to 50,000. And then we just click the next line. So because we remember that the highest payment amount is around 200,000, so we're not going to create more interval for that. So that is basically the intervals we created to analyze the payment amount. Okay. And for example, if we also want to check there are in total how much payment we paid in different intervals, we could choose the amount as the field to total on here, so that in the result it will show for each interval, it will besides to show how many records are for each interview, and it will also show how many are the total payment amount in each interval. Okay, and then we'll just click OK. So here shows the result. So you can see that we have about 280 records that have payment amounts between 0 and 10,000. And then we have 149 records that have payment amount between 10,000 and 20,000, and et cetera, et cetera. So the general trend of the distribution of the record in different intervals is that with the payment amount increase, the number of records decrease, right? So what are the things, or what are the findings you can find from this result? Just look into the... Okay, so maybe it's not that easy to see the trend and to identify the anomalies based on this Tableau data. So as we mentioned, usually we combine the data visualization, the graphs, with this tabular data to show or to highlight the abnormal things. So in this case, we can also show the result in the graph. For example, you can see there is a manual navigation bar above the results. And in the first one, if you click it, it will change the result from the table format to the graph. So now, can you identify something from the result? There's something abnormal or suspicious. Bars indicate how many records are located in different intervals, right? So what are the general trends for this distribution? General patterns for this distribution. You can see that generally with the interval or the payment amount increase, the record decrease, right? So what are the things that doesn't follow this trend? Yeah, you can see that there are a large number of payments that's between 60,000 to 80,000, right? So we want to take a look at this record. So we can do that by still click this graph icon. So it will go back to the tablet. Then we go to the 8th line to find this record, and you right click. You just click it. It will show you to extract the record or display the record. So we can display this record that have payment amount between 70,000 to 80,000, and then we can look into it to see what are the problems for them, and we can also extract it and using this other additional evidence or additional supporting information to check why there are so many payments that have payment amount between 70 to 80,000. Okay, so because these are just doesn't comply with the general trend of the distribution of payment amount. Okay, and what are there any other things we may want to focus, or we may want to extract them out to do the substantive test or the further investigation? Things you may find from this result. Okay, you can see that actually most of the records, most of the payments that have payment amount between 0 and 100,000, right? There are 3 of them has payment amount that greater than 100,000. So those are what we call the large payment amount. So we also may want to focus on those large payment amount to make sure that they reflect the real transaction and there is nothing wrong with this large payment amount. Okay. To do the further analysis of this payment, large payments, also we can, if we click into this number of record, this number shows in the results, and then we could choose extract record, just click it, and then we can give it will extract this large payment amount into another table. So we can give the other table a name to indicate what are the information in that table. For example, here we just can name it as large payment amount. And we click OK. So you can see that this table are extracted. These records are extracted into another table. Okay. I have some other table here, and that's from the analysis that I showed in the morning. So you should only have one table that named the large payment. Okay. So that's the distribution analysis of the payment amount. So we can see some abnormal patterns or abnormal trends in the payment distribution. And then we go back to the accounts payable data. You can double click it. Currently, we are still in the result of the stratification test. And we can go back to the data by click the data tab on the right-hand side, shows in the property. So now we go back to the original accounts payable data. So if you still remember the test I have mentioned in last week, there is also another test we can perform to this payment data is what we call the Benford's law. Remember, in the Benford's law we discussed in last week, it just it had an expected value of which numbers exist in different digits. So just to refresh you a little bit, the Benford's law can only be applied to those data sets that the data that naturally collected, there are no human intervene. So the payment data is this kind of data because they are collected just from the transactions. So there is no human manipulation of this data. So we can use Benford's law to see whether the payment amount complying with the Benford's law. Okay. Actually, the Benford's law test has been embedded in the idea. So if we go to analysis, and the second last analysis is the Benford's law. Okay. Click the analysis, and the second last function is Benford's law. If we click it, it will first ask us to choose a field to analysis because there is only one field that may comply with Benford's law in this field, in this table, which is the amount. So we just choose the amount, and here we can choose to test the Benford's law on the first digits, first two digits, first three digits, or the second digit of the payment amount. Because now I just want to show you this function, so I will keep all this analysis type checked and show you the results. Okay, and then you can just click OK. So here it will create 4 tables that under your accounts payable table that shows the result from the of using Benford's law in the first digits, first 2 digits, first 3 digits, or the second digits. And it will automatically bring you to the result that shows the Benford's law test of the first digit data. So here the result just shows that the expected number of number 1 exists in the first digits is 300 in this record. It means that there should be about 300 records in this data set have 1 in the first digits. And then it also gives you a lower bound and higher bound to help you to identify the abnormal. So if the number is just a little bit different from the expected number, so it's still between the lower bound and the higher bound, we can still consider it as normal. And then it shows the actual number of records and the difference between the actual number and the expected number. Okay, so you can identify the abnormal distribution of payment amount by the the first digits number. But still, this data shows in the tabular format, so it's not so easy to identify the abnormal things. So let's go back to the accounts payable data, double-click it. Yes, question? Mm-hmm. No, it's just use the expected number to minus actual number. Yeah, it just shows the Yeah. If it's positive, it means that the actual number is smaller than the expected number. So it's just below the expected number. And actually, there is one way to show this result more clear, is that you can go to the accounts payable, and then in the results, in the properties, right-hand properties, in the result, you should see a Benford's law tag. And then if you click it, it just demonstrates the result graphically. So you can see that we have less the payment amount that starts with 1, but what else we can identify? Generally, most of these numbers that comply with Benford's law, but what are the obvious abnormal outliers in these results? What are the abnormal things you can identify from this result? Yeah, actually, we can see that we have more payment amount, much more payment amount that start with 7. Actually, this is consistent with our results of stratification of payment amount. You remember, when we do the stratification, we find a lot of payment amount between 70,000 to 80,000. So all these payment amounts, right, start with 7. So those payment amounts are also highlighted by Benford's law, shows here. Okay. So this is to show the result of the first digits Benford's law. We can also see the result of the first 2 digits Benford's law by click the second. You can see there is also a navigation bar here above the result, and the one after shows that the first 2 digits Benford's law result. So we can see that there is the obvious abnormal of 79, that the payment amount starts with 79, right? So it indicates that there are too many payment amounts that start with 79. And then if we click into it and displaying the specific record, we will find that most of them are between 79,000 and 80,000, right? So one possible explanation for this phenomenon is that usually in the organization, the employees usually have an upper limit for them to approve some payment, right? So if the payment is large, or is extremely large, or larger, or greater than their upper limit, they may require the senior management or the other employee's signature to approve. So in some cases, the employees want to avoid this authentication from the authorization from the other employee or from their supervisors. So they just split the payment. So to make the, for example, they can split the payment into 2 or 3 parts. So each segment of this payment will below, the payment amount will below their upper bound. So they can still approve this payment just like twice or 3 times instead of asking their supervisors or other employees to do the to sign or to do the approve. Okay, so there are a lot of like 79,000 payment amount may indicate that the upper limit of one employee maybe is the 80,000. So they want to keep the payment amount just below the 80,000 so that they can still approve the payment amount without ask for the others' authorization. But this also need to need the support of the organization's policy or the other document to support this this hypothesis. Okay, so we can just close this and then go back to the accounts payable data by click the data tab. Okay, so we'll just go back to the data. As I mentioned, that there is one test we can do for the payment is that we can test whether there are any duplicate payment, right? I remember we have covered the duplication analysis function in ACL, but this function in IDEA is a little bit different from the duplication analysis function in ACL. So I also want to show you how to use the duplication analysis function in IDEA. So similar, just go to analysis, and then the fourth function is called duplicate key. So there are two sub-functions under duplicate key. Now first I'm going to show you the detection, duplicate key detection function, and then after that I will show you the other function. So if we click the duplicate key and then detection, so it will show you this. So basically the duplicate key detection is very similar to the duplicate analysis in ACL. So you can just define the criteria for the duplicate payments. For example, they have the same payment amount or they have the same payment date, something like that. So specifically how to do that is that here in the right-hand side, there are several options. The first, you just click the key for you to define the duplication. Here, if we set the payments that have the same supplier number and have the same payment amount, here we can just choose it from payment amount. So when you just click the row below the first row, so you will see a list of all the fields in this table, and you can just choose the fields you need to define the duplicate payment. So like here, we just define the duplicate payment as the ones that have the same supplier number and have the same payment amount. Okay. Then we just click OK, so it brings you back to the original dialog box. So here, another option under the key is which name the fields. If you click it, you will ask you which fields you want to display in the results. For example, here we want to show all the fields in the result. So and all fields has already been chosen. So we don't want to change anything. We just click OK. And then besides these options, it also can allow you to create a criteria, like the filter, to filter the duplicate record. For example, we are only concerned about the large amount duplicate. So we can set the criteria like we only display or only show me the duplicate payment that have payment amount greater than 10,000 or 1,000, so that kind of thing. But you could also leave this criteria blank to don't add any filter to the output. Okay. Then you can just click OK. So here shows the result. You can see that according to our definition, there are 5 records are identified as duplicate payment because they have the same supplier number and the same payment amount. Okay. So, but actually they have very different invoice number and the invoice date. Actually, these two have similar invoice number. So maybe we want to go back to check those invoices and to check the specific transactions to see whether those are the real duplicate payment. Okay. Okay. So that's for the detection function of duplicate. So let me show you another function of duplicate is the exclusion. So let's first go back to the accounts payable data. Just click the data set on the left-hand side. So just choose analysis and the duplicate key exclusion. Okay. So when you click this, you can see that this function just basically allow you to identify something that have the same value in one field and have different value in the other field. So for example, one test we can do that. We want to see whether for certain supplier, whether we always paid for the same payee. Then in this case, we want to check whether there are any records that have the same supplier number but different payee name. So here we can, in this case, we can use this duplication key exclusion. So it will first ask you to choose the fields to match. It means that you need to choose the fields in which the record you want to have the same value. So here we just choose the supplier number because we want to check whether there are any payments that paid to the same supplier number that have different payee. So in the second option, which is ask us to choose the field that must be different. Here we just choose the payee, right? Okay, and then we can just click OK. So it will show the result. So you can see that for example, for the first two results shows that for the supplier which has supplier number is B008, we are paid for two different payee. And then for the supplier number equals to C202, we are paid for even, how many? 8 different payees. So this is maybe not necessary to be a high risk, but this is usually what is not usually happened. So we also want to investigate this record to see why for the same supplier we're paid to different people. Okay, that's the duplicate exclusion function. And then, as we mentioned, then let's first go back to the accounts payable data. As I mentioned, another thing we can do is we can check whether all the check number are included in the data set to make sure the completeness of the checks, of the payments. And then to do this, we could use a function called the gap analysis, which also in the analysis gap detection, the 5th function, gap detection. So when we click it, the dialog box is like this. So first, it will ask us to choose a field to do the gap analysis. And as we mentioned, we need to test the check number because usually it should be sequential. And then we just choose it from supplier number to the check number. Okay. And then because we don't expect any gap between the check numbers, so we just keep the gap increment as 1. So in this case, we just make sure every sequential number is included in the check number. And then we just click OK. So here shows the result. So basically, the result shows that there are 5 check numbers are missing, and there are 2 gaps in the check number. So the first missing check number is just 700, 701-805. And then there are 4 check numbers missing between 701-8997 and 702-000. So these are the check numbers definitely need to be reported by auditors to show to the managers and to investigate why these checking numbers are missing. Okay, then let's go back to the accounts payable data. So that's for the sequential check for the check number. Here we're still in the gap detection result. So we can just click the data tab on the right-hand side to go back to the data. And now, another thing as we talked about is that we can check whether there are any suspicious dates. For example, whether there are any transactions that have payment date before invoice date. So we can do that actually by easily set a filter to filter out this record that have payment date before invoice date. Okay. So you can see that it's easier in ACL to add a filter. There is just a common bar above the data to allow you to add a filter, right? So in IDEA, it's also not difficult. You can see that in the property, the database tab, the last one is criteria. So if you click the criteria, it shows you this expression dialog box or the equation editor to allow you to create your own filter. Okay, so in this case, the filter we want to create is the payment date earlier than the invoice date. So we just choose the payment date here and choose the smaller. We just delete this equal because when we click this, it will automatically show smaller or equal. And then we just choose the invoice date. So the filter we set here is that the payment day smaller than invoice date, which means that the payment day is before the invoice date. And then here you can see there is a green check. It shows the validate and process this filter. So if we just click it, it will show the results that satisfying this filter. So you can see that there are 6 records in this payment data that have payment day even before the invoice date. So that's another risk indicator for these records. Okay. And for example, you can see in the first record, the payment day is 2008 August 1st, and the invoice date is 2008 August 7th. So the payment date is even like a week before the invoice date. So there must be something wrong with this transaction or this payment. Okay. Then we need to find more evidence to check whether it is just some special condition or special situation, or it's just due to fraud or something else. Okay. Okay, so this shows the result that's satisfying this filter, and we can easily remove this filter. Also, we can directly extract this this information into this records into another data set by click the data extraction. See the direct extraction. So you can see that in the direct extraction, it will show the file name that you can extract to the other file. Maybe we want to change this file name into the early payment. And then it automatically shows this criteria that we have created. So then you click OK, you will see that another table has been created. And if you click into this table, it will show you this 6 results. So that you can report the results in this table, or you can use this record in this table to do a further analysis. Okay. So now let's go back to the original accounts payable table to see what else we can do to this data. Okay. So if we go back to the accounts payable table, directly from the right-hand side, the table list, you can still see only see the 6 these 6 records, because here you can see on the right-hand side, you can see we still applied this criteria. So that's why we can only see the 6 records. So we can remove this criteria by right-click it and choose clear. So it brings us to the original 999 payments. Okay. So that's we have already tested the early payment that has payment day before invoice date. And as another risk indicator that related to date we discussed is that the payment that happened during the holidays or the weekends. So how can we check that? We can also identifying those high-risk transactions by setting the filter. Still, then we go to the criteria. But now we need to use some embedded function in this filter or in this equation editor to create the filter. So you can see that besides this equation editor dialog box and the list of all the fields shows below it, on the right-hand side part, there are a list of functions, right? You can see those functions are categorized. So we have some functions related to character, we have some functions related to numeric number, to date, to matching condition, or the financial information. So in this case, we want to check the weekend date. So we can choose one function from this date category, right? If we click this date category, we can use one function called DOW. So if you click this function to make it highlighted, the explanation of this function will show on the right-hand side, right? So basically, it shows that this function will return the day of the week as a number. So, for example, if it returns 1, it means that the date is a Sunday. And if it returns 2, it means that the date is a Monday, right? So we can check whether there are any payment date in this table that have 1 as the value in this function. So specifically, we can double-click this function, so it will show in the equation editor dialog box, and then we can just choose the payment date as the input of this function. Just choose the pay date. Okay. And the criteria we set is equals to 1. So this function just means that the payment date in this accounts payable data happened in Sundays. Okay. So we also just click this green check icon to process this filter. So we can see that there are in total 49 payments happened on Sunday. Okay. So we can also extract these 49 transactions into another table and further investigate why these transactions happened on Sunday. Okay. Okay. Okay, so that's for the analysis of payment date. Okay. Then let's clear this filter. Right-click it and just clear, and go back to the original accounts payable data set. So you may remember that another test we have discussed is that we can check whether all the suppliers that in this payment accounts payable data set are the authorized suppliers, right? Because we want to make sure that we only paid to those authorized suppliers. We don't want to pay any suppliers that we don't trust or we are not authorized. So in order to do this test, we need the accounts payable information as well as the authorized supplier information. We need to know which suppliers are the authorized suppliers, right? So this information is stored in the other table, shows here the authorized supplier. If you click into it, you can see that here lists all the authorized supplier. Actually, there are 48 of them. So you can see the supplier number. We know the supplier name, the address, and zip code, and total paid per year. Okay, then we can just check whether there are any supplier that have the supplier number that's not listed here as authorized supplier. So this is very similar to a test that we have done in the ACL tutorial. In that situation, we just test whether there are any credit card transactions that are paid to the unacceptable merchant, right? So in this case, we connect the transaction table with the acceptable merchant table, unacceptable merchant table, to see whether there are any unacceptable merchant exists in the transactions data. So here we also can join the accounts payable table with the authorized supplier table to see whether there are any unauthorized supplier that exists in the accounts payable table. So we can do this by choose File, the Join Databases. Okay. Here we can see that because we are already in the accounts payable data set, so it is set as the primary data set during this join process. Okay. And then we need to choose a secondary data set to join with this primary data set. So here, if we click Select, we can choose the authorized suppliers as the secondary data set to join with the accounts payable data set. Just double click it, so it will show as the secondary data set. Okay. And here, after the secondary data set, we can see that there is a file name that you can use to name it, because the result will be stored in another table, so you can give it a new name. And then you could also, for example, here, we can just name it as unauthorized supplier. Okay? And then in the right-hand side, there is a match option. So when we click it, it will ask us to define the fields that use to connect these two tables, right? So because as we observe or investigate the accounts payable and authorized suppliers table, we saw that the supplier's number is a field that exists in both accounts payable and authorized suppliers table. So we can choose it as the field to connect these two data sets. So in the primary table field, we can choose the supplier number, and the secondary table, we could also use supplier number. So that supplier number is just the key to link these two databases. Okay, and then we just choose OK. Okay, after we do that, there are several options for us to show the result. For example, we could just show the matched records. It means that the records exist in both accounts payable and authorized suppliers table. So is this what we want to identify or what we want to find? The matched items that exist in both accounts payable and the unauthorized supplier table. Is this what we want to find? No, right? We want to find the record that exists in the accounts payable table but not exist in the authorized supplier table. So here, because the accounts payable is the primary database, so we can choose the result as the records with no secondary match, because we only include in the primary data set. Right? Okay. And in the other circumstances, for example, if you, according to a need, you can choose the record that only exists in the secondary data set, or all records in the primary data set, or all records in the both data sets. Okay. And then here we just need to click OK. So it shows here there are 8 payments that paid to the unauthorized supplier. Okay. So actually, we can see that all these 8 payments are paid to one supplier. It's M100. So this is the only unauthorized supplier we identified using this data. So we may need to check whether this is a whether this is a real supplier, is a real company, or is it a new supplier we just start to doing business with, or whether there are other reasons for this supplier to be included in the accounts payable data set. Okay. Okay. So this is for the this is some of the tests we can perform for the accounts payable data set to identify the abnormal accounts payable and to analyze the unauthorized accounts payable. Okay. And then I'm going to show you some tests that we can done for the accounts receivable data set. So in order to do that, we need to close this project and then start the accounts receivable project, because the data is stored in that project. So let's just go to File, Set Working Folder. So we're going to open another working folder, the accounts receivable folder. We just go back to the desktop and double-click the accounts receivable to open it. Okay, then you will see that this project property indicated that there is a project stored in that folder, and you can just click OK. And it will ask you whether you want to close the open data set. You just choose yes. Okay. So now we close the accounts payable projects, and then we start to focus on the accounts receivable project. So similar to the accounts payable analysis, before we start to do the accounts receivable analysis, I would like to ask, what tests do you think we can perform to the accounts receivable data? Or what are the risks that may exist in the accounts receivable data? Any thoughts? What are the risks that may exist in the accounts receivable data? When you, as an auditor, look at the accounts receivable data, what things we want to see, we want to check? Yes? Yes, we need to check whether the customer is a real customer or similar to those we have the customer master data set here. So we want to check whether the customer we granted the credit are listed in the like trusted customer list, right? Okay, yeah, that's one thing we can, yes. Yeah, double billing, yes, we can definitely check that. Yep. And that's just similar as a duplicate payment, right? And what else we can do? Like there is a test that's specifically for the accounts receivable. It is usually like we intend to collect our credit as soon as possible, right? So that we not prefer that the customer who usually spend a long time to pay their bill, right? So we also want to check the age of the accounts receivable to see whether they are very old accounts receivable that like haven't been collected for like 3 to 4 months, so that we want to focus on those accounts receivable to see whether we can still collect them, and we will put more effort to collect those old accounts receivable, right? Yes, so that's some tests specifically for the accounts receivable. And besides this, there are some other things we can do, like there are whether there are any inappropriate allocation of credit or payments. For example, if some account has been paid already, but it's still listed as accounts receivable, and whether there are any significant percentage of the receivables that centered to certain customer. So that means that this customer may have higher possibility to default. And also whether there are inappropriate classification of the months, for example, whether there are any misclassified credit accounts. So also I will use several idea functions to show several tests here. Not all the tests here, but some of them. Okay. Similar to the accounts payable data, before we start to do an analysis, we also want to check the statistics of the general numeric and dates, those fields in this table. Right? So if we go to the field statistics, it will show you similar thing of the similar statistics of the those numeric fields, like the gross amount, GST and PST. And then those are the numeric fields shows here, and then the date. Here we can see whether there are any date field in the accounts receivable data. By the way, if you are using the original data set, you will find that there is no date field, right? If you choose the field statistics, you will find there's no date field here. So that means that when we import the data into the idea, we didn't appropriately set the type of this date field. Because we have if we go back to the data, we can see that we have a date, the accounts receivable date, but it didn't show in the field statistics. So it means that we didn't correctly set the field type of this field. So if you remember in the ACL, we have the opportunity to define the field type when we import data into ACL and after we import data into ACL, right? So similar in idea, we can also change the field type after we import data into idea. So we can do this by go to Data, the Field Manipulation, the last second one. Okay, so here you can see a list very similar to the outlay in the ACL. You can see it lists all the field name and the type of the field. So in your data, you should see like the date, the 8th, in the 8th line, the date field. It should be, if you use the original data set, it should be defined as the character, right? So you need to change it from character to date. So you just click it. So it lists the other type of the data, character, numeric, time, or date. So you can just choose the date. Okay. You have questions? On the 8th line, you should change the type of this date from character to date. Okay? Okay. And here, because there are so many date formats, so we need to define a specific date format for this field. Okay, like here we can do it in the parameter. Here, because in this data set, the date is presented as year, 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 month, month, and date, date. So we can just type year, 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 / month, month, / date, date in the parameter to define the specific format of the date. Okay, then after you finish this, we can just click OK. So it will bring you back to the accounts receivable data, but when you click the field statistics, so you will be able to see this date field in the, when you choose the field type as date, you will be able to see the statistics related to this date field, right? For example, the earliest date is 2007, April 11th, and the latest date is 2008, April 1st. Okay. Okay, and the most common date is Tuesday, and most common month is March, and how many days in January, February, March, and November, September. Okay. So it told us that the latest day in this accounts receivable data is the 2008, April 1st. Okay. Then let's go back to the data. If we want to analyze the age of the accounts receivable, then we can do an age analysis in IDEA. For example, when we choose analysis, then the aging function. So you can see that first we need to define an aging date of all these accounts receivables. So because when we do the field statistics, we find that the latest day of these accounts receivables is 2008, April 1st. So this usually is the date we want to set as aging date. It's the last day of the audit period. So we want to calculate how many days that the accounts receivable exists before this date, right? So we set the last day of this auditing period as the aging date. So it is the 2008 April 1st. Okay. And the aging field to use is the date field, because we want to. This is only date field in this table. and we can calculate the amount during each aging interval. Okay. And then here you can set different aging intervals. You can see that the default aging intervals basically are set by month. So the result will show how many accounts receivable are within 1 month before the aging date, and how many of the accounts receivable are within 2 or 3 or 4 months before the aging date. So if you need it, you can set the aging interval as weeks. Then here it can just choose it by, you can just set the first interval as 7, and then 14, and then 21, something like that. Okay. And here, let's just keep the default aging interval, and then choose OK. So you can see that here shows the result. There is 166 records that within 166 accounts receivable that within 30 days before the aging date, and 93 accounts receivable before the 60 days, which is about 2 months, and the 37 is within the 3 months of the the aging date. While there are 3 accounts receivable that happened before 3 months of the aging date. So that are that can be considered as the old accounts receivable amount. So we can extract this information and to report it to the managers to ask them to focus on those old accounts receivables to make sure that they can be collected, and to put more effort to collect those accounts receivables. Okay. Okay. So that's for the age analysis. And then you can see that another thing we have discussed is that we want to make sure that all the customers that are granted credit should be listed as the trusted customer. So this analysis is very similar to the analysis that we have done just using the accounts payable data to make sure that every suppliers that in the payment information is the accepted or authorized suppliers. So we can also do this analysis by joining the accounts receivable table and the customer master table. Okay. And then, if you remember in the ACL, we have 2 ways to join table. The one way is the physically join 2 table, then to create another table. And then another way is that we can virtually join 2 table, but we can virtually merge or link 2 table instead of physically join them. So there is another similar functioning idea to virtually link the table. So it's in Fire, the visual connector. Okay. So you can see that if you click the Fire visual connector, it will automatically include the table that you are working on in this area, and then it also lists all the tables in this project for you to choose. So you can choose, for example, the customer master table here, double click it. It will also be included in this area. Similar to ACL, you can join these 2 tables by directly connect the fields that exist in both tables. For example, here is the account number field. We just click it and drag it to the account number field in the customer master data. Okay. Okay. So after that, we can just click OK. So now you can see that there are only 2 options for you to display the output For example, it can only show the matched fields, so the fields that exist in both accounts receivable and customer master data. So this is not, as we discussed before, this is not what we want to focus, right? Also, it can show all the records in the accounts receivable data that matches the customer master data. Actually, this is also not what we want to show in the result. So even though visual connector is an alternative way for us to join tables in IDEA, but it can only show the result in two ways. It only shows the matched result or the result in the primary table. So it cannot fulfill our purpose to do this analysis. So we cannot use this function to do this analysis. But if we want to do some other analysis that we only want to show the matched things, that things exist in both tables in the results, we can the visual connector is another choice for us to use. Okay. So you can see that there are 228 records that exist in both tables, but this is not what we want. Actually, we want to know the other 72 records, right? So in this case, let's go back to the accounts receivable data. We still need to use join table. So you can see that even though there are some functions that in ACL and IDEA, they are very similar, but they have differences. Okay. So in order to do this test, we still need to use the join table function here in the file, join databases. Okay. So the primary database is accounts receivable, and the secondary database we can select as the customer master data. Just click OK. And then the match, the key we need to match these two data sets is the count number here in both primary table and the secondary table. And we just click OK. And also we want to show the records that with no secondary match. Okay, so it just shows here. And then click OK. So here you can see that it shows the 72 records that does not have the 72 accounts receivables that granted to the customers that are not listed in the customer master file. It means that it are not like usually we collaborated customers. Okay, so we also want to see whether what happened to this accounts receivables and why this credit are granted to those kind of customers. Okay. Another thing you may notice that you can see there are some just based on this table you can see there are some negative accounts receivable amount. Okay, for example, this one and this one. Then we may also want to analyze why, to understand at least, why there are those negative like accounts receivable amount. Are those for the returns, or are those just for the refund or something? For example, we can also extract those negative amounts by setting the filters and then extract them to another data set, as we did in the accounts payable data set. Okay, so that's until now I have covered all the functions that in IDEA. So you can just if you go to the analysis, you can see that we covered the stratification, duplicate key, the gap detection, aging, Benford's law. And for the pivot table, I think if you are familiar with Excel, you know what this is about, so I don't need to talk about this in IDEA. And then for the summarization, we have covered this in ACL. It just led to summarize some numeric fields based on some categorical fields. For example, we can summarize the accounts receivable amount that granted for by the account number to see which account number has the largest accounts receivable. This is very similar to the function in ACL, so I don't want to cover it again now. And then we covered the join database, visual extraction, visual connection, and then the extraction of and the field manipulation. So basically all the basic functions in IDEA has been covered. So you can see that the functions that included in ACL and IDEA are very similar. So also in ACL we have Benford's law, we have age analysis, and we have stratification. But just they have some little bit difference about these specific functions. For example, in the field of statistics, IDEA can provide more detailed statistic measurements for each numeric and date field. And for the visual connector, and the IDEA doesn't have all the full function as the join table. But in ACL, the link or virtual connection that can almost replace the join table function. So you can decide to use which tool or which software just based on your demand or based on the different functions you want to use to do the test. Okay, so basically that is what I want to cover in the IDEA tutorial. I just have 2 clicker questions. Did you all bring your clickers here? If not, it doesn't matter because we have the attendance sheet today. So I think, let me check. Okay, so here I have only 1 clicker questions. Which step does not need to be done in IDEA? One is A is verifying field format after importing a new table that we have discussed. B is check the field format when joining 2 tables. C is check the field length when joining 2 tables. Right? If you remember in ACL, there is an extra step. So let me see. Yeah, actually the correct answer is C. And most of you got the correct answer. Good job.